Might a technical investor be looking for on a chart when they're trying to clarify a stock's direction? Today, we're talking about trend identification. Let's explore it. Good morning and welcome, everyone. This is Cameron May, and I want to welcome you to this morning's discussion of getting started with technical analysis. And today we're focusing on trend identification, which is something that a lot of investors struggle with. It seems like such a simple concept: buy low, sell high. Find the trend and maybe embrace that. Well, that can be difficult when you're getting that day-to-day noise. So what are some of the techniques and tools that a trend investor might employ when they're trying to provide that sort of clarification? So that's what we're going to be talking about. We're going to be spending about 25 to 30 minutes exploring that today. So we're going to dive right into it. But first of all, let me say hello there to Diane. Welcome back, all of you returning veterans. It's always great to have you here in class. I always appreciate your contributions. If you're checking out today's broadcast for the very first time, I want to welcome you as well. I want to give you an invitation to join me every Monday. If you are just getting started with your own technical analysis, this is a beginner level class. If you need maybe something a little bit more advanced for charting, we actually have a class on Fridays, 2 o'clock Eastern Standard Time. It's taught by Scott Thompson. It's called Advanced Charting Techniques. You're invited to join us there as well. Hello there, Lourdes. Good morning. Now, before we can get started, we first need to pause to consider the risks associated with our investing. So options are not suitable for all investors, as the special risks inherent to options trading may expose investors to potentially rapid and substantial losses. Spreads, straddles, and other multi-leg option strategies can entail substantial transaction costs. All investing involves risks, including risk of loss. No soliciting and no photography. We are going to be using real examples in today's discussion. Don't take that as a recommendation or endorsement of those securities or those strategies. And the use of a stop order is not a guarantee that you will buy or sell at a specific price. Hello there, Wayne. Great to see you. All right, but let's go set a bit of an agenda. And now here, of course, is a reminder of your Greeks. For you options traders, of course, we recognize how important that can be. But we're right now in the third lesson in a series of 8 discussions that are intended to provide a good introduction to those who are just looking at charts for the very first time. And they're not comfortable at all with the navigation of the tools on the charts or some of the indicators. How might those be employed? So we've already gone through just an introduction to technical analysis. We reviewed how to set up your charts. And now we're starting to set the stage for when we bring up that brand new fresh chart, what might an investor first look at? And that might be the trend. Is the stock going up or is it going down? Because if you're employing, let's say, bearish strategies on a stock that is primarily bullish, you might be swimming a little bit upstream, fighting kind of an uphill battle, and vice versa. All right. Then Dana, hello there to you as well. All right, so what are we going to be specifically covering today? Well, we're going to identify some common technical techniques for trend identification, and that includes something called Dow theory of trends. And then we're also going to use moving averages. Now, just as a heads up, Dow theory of trends requires a little bit more practice and a little bit more discretion, whereas the employment of moving averages might be more for a little bit for those who like to use techniques that are a little bit more black and white. Okay? So it's really up to you. Do you like to lean on your experience and apply your own approach to things, or do you like things to be slightly more automated? But then to illustrate both of those concepts, we're going to apply those principles and techniques to current examples. So let's go right to Dow theory of trends. Okay? I don't know if you know who Charles Dow is. He is that gentleman for whom the Dow Jones Industrial Average is at least partially named. But Charles Dow was very likely the very first technical trader of the markets to recognize the ebbs and flows of an upward trend, the ebbs and flows of a downward trend. He actually put words to describe that sort of behavior on a stock price or on, basically on a stock performance. And this is predating the introduction of charting by decades. So Charles Dow actually started publishing a pamphlet, publishing a newsletter way back around the turn of the last century. And in that pamphlet, he noticed, as he observed price movement on stocks, that they tend to run up for a while and then pull back for a while, run up for a while, pull back for a while. That's not a real revelation for anybody. But what might have been more of a revelation, at least to those at the time, was that he noted if you could track the peaks in these cyclical highs and lows, and then follow whether each subsequent peak was higher and each subsequent low was higher, that might define an upward trend for an investor, and it might carry forward for potential future application. But if you saw lower highs and lower lows, that might mean that the stock is now stair-stepping downward, and it provided, at least for him, some insight through that day-to-day noise to give him some technical insight into the overall direction of a stock. So how do we visualize that now? Well, now we have charts. So you don't have to keep a day-by-day log of what's happening. So to apply that Dow theory of trends, just do a hypothetical scenario here, an example scenario. Look at this graphic on your screen, and you'll notice it starts off with a low point, and then we rally up to a peak, and this is just representing a stock move. There are some oscillations in between the low and the high, but generally speaking, this hypothetical security is making progress upward, and then it pulls back down to a low. And then it runs up to another peak, and you'll notice that this new peak exceeds the highs achieved by the previous peak. And then we pull back down to a higher low. Notice that's labeled. As soon as you have two lows to be compared, if the one is higher, if the second in the sequence is higher than the first, we call that a higher low. And the combination of a single higher low plus a single higher high, as far as Charles Dow was concerned, is the definition of an upward trend. And the more you get, the stronger the trend. Okay? So that's theoretical application of Charles Dow's proposition here. How about we go look at some real examples of the things that we're going to be discussing. Now, I did some digging around in the charts, looking for higher highs and higher lows. Guess what? It was a little bit tough this morning, right? Think about what's happening with the markets. I know it's uncomfortable to discuss this because your 401ks very likely are suffering right now if they're primarily constructed of bullish-oriented securities. But let's go have a look at our paper money account. And we're going to navigate straight here to our charts. And let's look at a symbol CME. Now, one thing that I do want to point out with the Dow theory of trends and with most technical principles that we learn is that they can be transferred from one time frame to another, or at least technicians from time to time will do that. They might apply the same concepts on a 1 minute chart, a 1 day chart, a 1 week chart, and so on. Okay? So what we're looking at here is a 1 year daily chart, and you might see for CME Group it's generally been working its way up from left to right. So let's apply what we just learned. Okay? I'm going to come down here to my drawing tools, make sure that I've selected my trend line tool, and let's look for some of these cyclical lows. So you look at this period, we raced up to a peak right here, and then pulled back to a low. So already we have a high and a low identified. Now, sometimes technicians will go a step further than just looking for a high and low, and they'll try to standardize things. And it's sometimes speculated that on a daily chart, these highs and lows, generally speaking, they're separated by a period of about 3 to 5 weeks, or about a month in between a peak, from this peak to the next, or from this low to the next. You can see that there can be variation in those themes, right? But there's a high, there's a low, and then the stock goes for a fairly extended run and hits a peak right here. You use your judgment. Does that look like we have a higher high? At least in my view, it does seem to be the case. And then the stock starts to drift downward and ultimately hits a low about a month later, right about here. Okay, now compare our lows. This was about 3 weeks later, I should say. Does that look like we have higher highs and higher lows now? Yes. And these, you can't necessarily anticipate them. You just with most, as with almost all technical analysis, you see it in the rearview mirror. So if you were looking at this back in, let's say, late September, you might have to wait until earlier October to be able to look back in the rearview mirror and say, oh, there's that higher low I've been waiting for. Okay? But then we run up, hit a new peak, and then we get this is a quicker cycle. There's a new higher low, higher high, higher low, higher high, higher low, and so on. Now, sometimes you'll start to see a shift in trends. And here you might see, well, we sold off to a low, ran up to a peak, lower low, lower high. So what might be going on with CME Group at the moment? Maybe shifting into a different technical gear. Let's go talk about that. So if the definition of an upward trend is a higher high and a higher low, what do you think might define a downward trend? Very simple. Lower high and lower low. So there is your hypothetical scenario. Let's look at a lower high and a lower low on a chart using a real example. Let's have a look at, let's say, Raytheon. In my searching, I'll tell you it was a lot easier to find these given today's market climate, right? Or given let's say, the recent months' market climate. But Raytheon hit a peak. Let's just start right here. We hit a peak after a bit of a pull up, so it might have been in a short-term upward trend, but then sold off to a low. A technician right at this point might be looking in the rearview mirror and saying, wait a second, there's a low. Where was the previous low? Uh-oh, this is a trend that might be in danger. Highs were still going up. Lows are starting going down. There might be a little bit of softness in a trend. All right. Then there was a very short, comparatively unenthusiastic bump upward. Look at this high that was achieved in the middle of October compared to the high from early October. And you'll see that looks like a lower high. Now to go with what may have already been identified as a lower low, and we have a downtrend, and that cycle looks like it continues. Higher highs, lower highs, lower lows. And here's sort of a trend within a trend. Lower highs and lower lows on a shorter term time frame, but continuing downward. Now this is something that takes a little bit of practice, and it requires some discretion. Because some of you might have been saying, wait a minute, Cameron, why wouldn't you look at this and say, well, there's a low, and there was a little low up here, so wouldn't that mean that the trend might be strengthening a bit? Well, some technicians might look at this and say, well, that's a higher low. Others might say, well, there wasn't much of a high that followed there. It was more like it went sideways for a little while and then continued downward. It does take a little bit of practice. That's why I mentioned that there is some discretion here. For those of you who like to have things a little bit more black and white and you don't want to lean on your experience quite as heavily, we do have another technical indicator that might be used that's coming up in just a few minutes. But lower highs and lower lows define, at least for Charles Dow, a downward trend. So what do you think a sideways trend might be? The simple, obvious answer seems like it would be, well, higher highs and higher lows is an uptrend, lower highs and lower lows is a downtrend, so equal highs and equal lows must be a sideways trend, right? Well, yes, you would say that, but I'm going to expand on that, okay? Sideways trend, equal high and equal low. So here's our theoretical example. Now, I want you to do something for me, though. Look at the high here on the graphic, and look at the one over to the right. Are those truly equal? Nope. The one on the left is actually slightly lower than the one on the right. And that reflects reality. How often do you have peaks that are exactly at the same price level? How often do you have troughs that are, I mean, down to the penny, that are exactly the same price level? A word that you might use rather than equal is similar. Okay? Similar highs and similar lows define a sideways trend. However, there are other variations on this high-low theme that we might need to account for. What if we had other combinations? What if we were getting higher highs but also lower lows? Well, we're not going up, we're not really going down, the net effect is going sideways. What if we're getting lower highs and higher lows? Same deal. Not necessarily going up, not necessarily going down, generally going sideways. What if we had similar lows but higher highs? Or similar highs but lower lows? You're starting to see there can be all sorts of variations, all sorts of combinations. Here's the bottom line, the way you may think about it. If it's not higher high and higher low, it's not an uptrend. If it's not lower high and lower low, it doesn't fit the definition of a downtrend. Everything else might be categorized as a sideways trend. Does that open it up a little bit for you? Let's go look at some examples. Let's go to our paper money account. Let's bring up, let's say VRTX. VRTX looked like it had higher highs and higher lows going up to its peak here in early October. Started work into a downtrend, but look at more recently. I think this is a good example of what I was just discussing. Here are two similar lows with a higher low in between. And then if you look at the highs through that period, they're also similar. Are they equal? No, they're not equal. This low is a little bit below that one, as is this one. This one peaked up a little bit higher than this one, but it's just a general observation that prices aren't really making meaningful progress, apparently, in one direction or the other. There's our sideways trend. Let me give you one more example of those, because I think those might be the ones that take a little bit more practice. Here's LIN. Okay? If you look at the lows are actually pretty good for quite a while, right around that $153 mark, $153.50. The highs were more choppy. Now, as I mentioned, if you have equal or similar lows, but varying highs, where are you really going anyway? Still going sideways. So overall, here's a good example of a sideways trend. And it looks like there was an attempted escape from the sideways trend just within the last few weeks, and it looks like we might be resuming that trend. Okay? So there's trend identification using your own experience, your own discretion. What if you like it to be a little bit more automated? Well, technicians have been trying to address that effort as well, and what they'll do is apply something known as a moving average. Now, I've got a question for you. We have a good number of people here in attendance. Let me take a peek here. Total number, there we are. Yeah, almost 4 dozen people. So I would think, and I know some of you who have been in my classes for quite a while, who's already comfortable with the definition of a moving average? You can go ahead and chat that in. And whether you use it in your investing or not, I just want to discuss this concept. So a moving average is an attempt to draw a line through a chart. Wouldn't it be nice if somebody just drew a line right through the middle here and just said, yeah, if the line's going sideways, that means we're in a sideways trend. If the line is going up, it means we're in an upward trend. If the line's going down, it might mean we're in a downward trend. That's what a moving average is intended to do. And there are different types of moving averages, because you might be asking a question, well, what trend are you talking about? Are you talking about the trend over the last few days, the last few months, maybe over the whole year? Well, moving averages are very customizable. So let's put one on our chart. Let's clean up the chart right now. Matter of fact, how about we go back to our upward trending stock, and I'm going to come up here to this little beaker icon. This is where you go to add technical indicators to your chart. They're also known as studies. So I'm going to click on that little beaker and type in the word simple, because these indicators that we're going to be discussing, these moving averages, there are a couple of different varieties. There's simple and there's exponential. We're really only going to be using simple since this is a getting started with technical analysis class, and this is a good way to introduce people to it. But when you type in simple, matter of fact, let me back off that just a moment. When you first click on that beaker icon, you get this pop-up that has a whole list of hundreds of potential indicators or studies that can be used on your chart. And you can just go through them in alphabetical order and find what you're looking for. You know, I'm going to be looking for simple moving averages, so I could come down here to the S's and look for simple moving average, or I can just do a keyword search. Type in simple, and it eliminates anything that doesn't have simple in the title, and we're just going to choose simple moving average. I'm going to click Add Selected, and you'll notice now it says we're about to add to the price chart, that's behind us, a simple moving average. And this one focuses primarily on the last 9 trading days on a daily chart. If we were looking at an hourly chart, it would be the last 9 hours, and so on. But you're probably thinking, well, that's kind of short, isn't it? Yeah, that's intended for a shorter term trend identification. Okay, but how about we just leave it at 9? I'm going to click Apply, and watch what happens as soon as I click Apply in the background here. Click Apply, and that line appears. Okay. Now I click OK, and you'll see, you know that question I asked, wouldn't it be nice if we just had somebody draw a line through the chart to identify the overall direction rather than me having to agonize over where the highs and the lows might be and interpret whether they're higher or lower or similar or a combination of the above? Well, look at that 9-day moving average, and you'll see it is a line that's indicating the general trend, and recently you can see that weakness that I was talking about technically here. The line started moving down, although it started to point just slightly upward again recently. So what is this moving average? How is it constructed? Well, I've been mentioning over and over again that it looks at the last 9 days. Here's all it does. It looks at the last 9 days, looks at the closing prices over the last 9 days, and figures out the average. So if some are up here and some are down here, the average is going to be in the middle, calculates the average, and it puts a dot on the chart. And then it just, when we have another day that's gone by, it shifts forward one day and it recalculates that average, so there's going to be a slight difference in the average, and it puts another dot on the chart. And so it just recalculates every day the trailing 9 days, the average closing price, and puts a dot on the chart, and then connects those dots with a line. And that kind of smooths out the day-to-day changes in prices and presents maybe a little bit clearer picture regarding a trend, at least through that one technical lens. Does that mean it's guaranteed to work every time? And then if the moving average is going up and you take a bullish trade, that you're guaranteed to make money on that bullish trade? Nope, because trends can change. But overall, I think you can see the potential for application. All right? Well, what if I wanted a longer term view? What if this is still too noisy for me, right? Look at how often this is changing direction, because it's only taking in 9 days worth of data. Well, what we can do, pop back up here to our beaker icon, and let's change the time frame. How about if we go for, let me click on this little gear. That allows me to customize the number of days that are taken into consideration. And again, if you were to change this to a weekly chart, it would be the last 9 weeks rather than the last 9 days. But let's put in 50. Try to envision in your minds, before I click Apply, what's going to happen. When you have 50 days worth of data, do you think that's going to make the line more volatile, or is it going to be slower to change? Yeah, this is going to make a smoother line. Let me click Apply, and you'll see what I'm talking about. Click Apply, click OK, and you can see now we have this longer term trend. So we're not worried as much about shorter term changes in direction. And think about how this might be useful for a technician. When they're in, let's say, some bullish positions and they have that longer term outlook, and you start to get a few days downward, sometimes that can be a little unsettling, and you wonder, well, is this the ultimate shift in the trend? Well, look at this period right back here in July, just as an example. There are several other examples all throughout this chart. We had about 4 solid down days on the stock. What did the moving average do in response? Well, it was still looking at the 46 days preceding that, so these 4 days still influenced the direction, but really it just softened the trend, but the trend never reversed. Now here, there was a little bit of a dip in that trend, but overall, a pretty clear upward picture. So a longer term or an intermediate to longer term technical investor might look at this, and it might give them a little bit more confidence in sticking with those bullish positions through some fairly choppy waters. All right. So obviously, when you're introduced to a couple of new technical concepts, it might take some practice. Here's what I would suggest you do. Bring up a couple of charts and see if you can first identify the trend on your own, highs and lows, and then apply a moving average. See if it confirms your trend identification or if it's in conflict. And then finally, you might want to experiment with adding different moving averages and see which one might best suit your technical approach if that's what you're doing. And you can practice that in your paper money. All right, but class, we've actually accomplished everything that we set out to do. We have discussed the Dow theory of trends. We looked at several examples. We then moved over to simple moving averages and applied those. So trend identification, hopefully at the end of this discussion, you feel a little bit more confident in the identification of trends. Okay? I'm going to set you loose. We're going to take a little bit of a break in our education broadcast day. But coming up next, we have the splash. And on Mondays, we always focus on ETFs. That class is taught by Pat Mullally and Mike Follett. They always do a great job. There's a summary of their presentation for you. If ETFs are part of your portfolio, that might be something good to come back, revisit. But I want to give you an invitation to join me next week when we're going to be addressing this question. If you're in an upward trend, is there ever a bad time to buy? Is there ever a better time to sell? What about a downward trend? How about a sideways trend? We're going to start to move toward the theoretical optimization of entries and exits within trends. Okay, so we're going to be talking about something called support and resistance. I'd love to see you there. It's price floors and price ceilings. Time to set you loose. Remember the risks associated with your investing. We did use real examples in today's discussion. That's not a recommendation or endorsement of those securities or strategies. I will see you next Monday to talk about support and resistance. But between now and then, I want to wish you the best of luck and happy investing. Bye-bye.